Hello everyone, it's Wednesday, March 26, and today we're taking a closer look at the euro and the British pound charts to assess potential market moves. The euro posted gains on Tuesday, buoyed by relatively upbeat sentiment data from Germany. Business climate, current conditions and expectations all showed improvement, signaling that Europe's largest economy continues its recovery path. While the readings came in slightly below forecast, the upward trend supports optimism that the recently announced fiscal stimulus measures would take effect. However, later in the session, the euro reversed course and moved lower, pressured by US macroeconomic data. Surprisingly, even though the US Consumer Confidence Index fell sharply from 100.1 to 92.9, worse than expected, the dollar held firm. The greenback's resilience appears tied to renewed remarks from Donald Trump, who reiterated his commitment to further tariffs and showed little appetite for loosening trade policy, despite earlier comments suggesting a softer stance. This helped the dollar regain ground in a broader correction against the euro. That said, this correction risks evolving into a more sustained bearish phase for the euro, so caution is warranted at current levels. The US economic calendar also included new home sales data, which missed expectations but still improved from January. This provided additional support for the dollar. Furthermore, several Federal Reserve officials signaled that the central bank would proceed cautiously with interest rate cuts, concerned that Trump's aggressive tariff agenda could reignite inflationary pressures. In this context, the probability remains high that the Fed will keep rates elevated through at least the first half of the year. Today's macroeconomic calendar puts the spotlight on key UK economic data. The Consumer Price Index is expected to have risen by 0.5% month-on-month in February and by 2.9% year-on-year. For context, January saw a decline in consumer prices. If today's figures indicate further easing in inflation, the British pound could face renewed pressure as markets begin to price in a more dovish outlook from the Bank of England. Core inflation is forecast to have slowed to 3.6% on an annual basis. In addition, the UK's annual budget announcement will draw attention. Finance Minister Rachel Reeves is reportedly planning a £2 billion budget reduction, an austerity signal that could weigh on the pound sterling. Meanwhile, Wednesday's euro area calendar remains light, leaving traders to turn their attention across the Atlantic and the United States. Durable goods orders are projected to decline, which could put pressure on the dollar. Also on the agenda are speeches by Federal Reserve officials Neil Kashkari and Alberto Mussolem. Their remarks will be closely watched, especially as recent comments from policymakers have tended to offer support for the greenback. Now let's move on to technical analysis. The 1-hour EUR USD chart suggests a potential buying opportunity on a false breakout at 1.0780 with upside targets at 1.0818. If the price breaks through and consolidates about this level, the euro could rise to 1.0856, potentially reaching 0.892. At this mark, I would recommend going short on the rebound in anticipation of a 30-35 pip move. Short positions at 1.0818 and 0.856 should be considered on a false breakout. Alternatively, a decisive break below 0.780 would put bears back in control, paving the way for a decline towards 1.0746 with further downside potential to 0.715. At this level, it would be wise to go long on a rebound, targeting an intraday correction of 25-30 pips. Going long at 1.0746 and 0.780 would be relevant in the event of a false breakout. Turning to the British pound, the currency remains range-bound, with both bulls and bears vying for control ahead of key UK inflation data. A false breakout at 1.2926 following the release could generate a buy signal, potentially pushing sterling up to 1.2949. A break above this level would open the path to 29.69. The level of 29.88 would be the most distant target, where I would recommend going short on the rebound in anticipation of 15-20 pip move. Short positions at 1.2969 and 29.49 would be prudent after a false breakout. If buyer momentum fades around 29.26 following UK inflation data, long positions should be deferred to either 29.02 on a false breakout or 28.74 on a rebound with an expected intraday correction of 25 to 30 pips. Long positions at 1.2902 and 29.26 should be considered only in case of a false breakout. Best of luck.